Hi, this is Matthew Cratter from Trader University, and today I want to talk about the crash in crude oil that's currently going on. If you're interested in crude oil, gold, commodity futures, momentum stocks, or just interested in seeing how I'm trading this financial crisis and bear market, be sure to hit that subscribe button. So just 3 days ago, I came out with a video warning all of you that oil prices, not only could they go to zero, but they could actually go negative. Now, little did I know, this was just 3 days ago, little did I know that this would happen on Monday, just 3 days later. So the front contract for crude oil futures, as we speak, is almost at zero. It's trading at 46 cents per barrel. And you can see from this chart, this is a monthly chart of crude, that it's never traded this low before. Not even in the 80s when the crude oil contract was first invented. The lows on here are something like $8 or $9 per barrel. So we've never seen anything like this in the front month. And there's a good chance while I'm recording this video that not only does this contract go to zero, but as I pointed out in my video last Friday, the CME, which is the futures exchange where these crude oil futures are traded, has adjusted their software to allow oil to trade at negative prices. So we'll keep checking in here, but we may see this go actually negative. Now, what does it mean when something sells for a negative price? Well, it means that you are actually being paid to take the oil off of someone's hands. So not only you don't have to give them cash, they give you oil and they give you cash. This is one reason this contract is down almost 99% on the day. For those who are interested in bottom fishing, make sure you realize that this not only can go to zero, which would be a 100% loss, it can actually go further than that. It can actually go negative. Now, to put this in perspective, 12 ounces of bottled water, sort of a cheap brand like Dasani, this isn't even Evian or something, is about $3, at least online here. Well, this is actually for a whole bunch of them. So these bottles are actually a lot less than that. I guess there are 8 of them. So you could either have 12 ounces of bottled water for $3, or you could have gallons and gallons and gallons of crude oil for 16 cents. This should put it in perspective. 1 barrel of crude oil is equal to 42 gallons. So what this shows is that there's a huge oversupply currently in the U.S. oil market and the global market. Basically, demand has fallen off a cliff. I talked about this in a couple previous videos, which I'll link to below. Demand has fallen off a cliff because obviously a lot of people are just staying at home because of the virus. They're not driving. I haven't driven my car in a few weeks. I have an SUV that I normally fill up 3 or 4 times a week, as does my wife. So obviously demand has fallen off a cliff, and not just demand from drivers for gasoline, but demand from factories that are idle or closed, businesses going out of business. And then there's been a huge, the supply is slow to adjust. And so there's currently, the U.S. is currently running out of storage for crude oil. And the thing about crude oil is you can't just dump it in a river, or hopefully no one would do that. And so you need a place to store it. The normal storage place is Cushing, Oklahoma. This is the major trading hub for crude oil. And this is where if you trade crude oil on the CME, on the NYMEX, which is part of the CME, this is where you would actually deliver your oil if you are a seller, and you would pick it up if you're a buyer, if you held the contracts to expiration, which very few people do. But Cushing is filling up. It was originally projected to be full. The storage tanks there are completely full by midsummer. Based on the way oil's behaving, it suggests that it's actually probably already full. Now, someone had a great suggestion online. One way to save 24-hour fitness from bankruptcy, which they've announced may be going on, is they could buy these crude oil futures here, take delivery of the oil, and store them in their unused swimming pools because all the 24-hour fitnesses are closed due to the virus. Take delivery, dump the oil in their swimming pools. This is obviously facetious. It's a joke. And then sell them forward into the June contract, which is trading in the low 20s. So I thought that was pretty brutal, but kind of interesting. Now, if we look at where the oil stocks are trading, ExxonMobil down 3%, CVX, Chevron, only down 3%, etc., we see that these have not gone to zero. Now, the reason for this is they're being priced on future cash flows. And if we look at the crude oil curve, so this is the real-time prices. And you can see that oil is always, the futures in oil always have a certain delivery month where the buyer would actually take delivery and the seller would deliver the crude oil. You can see the May month, the May contract, let me just scroll in a little bit here. The May contract currently down to 18 cents. That's down from that's down $18 on the day. Now you can see if we scroll out a little bit here, that's the May contract that's almost gone to zero and could go negative. The June, July, August, these are all trading at much higher prices. So close to $22 a barrel for June of 2020, pops up to 28. So what this tells you is that there's an immediate oversupply, but the market is pricing in either resurgence of demand, maybe because things open back up and the summer driving season starts, and perhaps things go back to normal, which I don't think happens, at least happens that quickly, or there's a supply, enough of a supply cut that you don't have this huge imbalance between supply and demand, and you find an equilibrium price, an equilibrium that balances the buyers and sellers closer to 22 or 28. And then if we look out a year from now to May 2021, we can see that's already pricing in $35 a barrel oil. So this is always the tricky thing. If you think oil is really cheap now, you want to buy it because you think it's going to go up. Well, the market already knows that this is going to happen. And so if you want to be able to make money in crude oil, you could buy this futures contract. Not investment advice, futures trading is risky, but it would have to go up above 35.49 as we got closer to May 2021. The spot price or the cash price of oil as this futures contract moves into expiration and delivery would have to be higher than 35.49 in order to make money. So unfortunately, there's no arbitrage here. The one thing you can do is you can take delivery. You can buy this oil for 13 cents a barrel. You can store it, and you can sell it. Enter a sell order for a futures contract for June, which is basically this will be the front month in, or will be close to expiring in 30 days from now, and you would have to basically the storage cost would have to be less than this difference. Wow, we just saw it happen. Here we go. I've never seen this. Price of crude oil just went negative. So now there's so much oil, people are paying you to take it off their hands, and they're unwilling to store it for a month and sell it for $22, which means they don't want to do that. They don't have a place to store it. If they can find a place to store it, the cost of storing it is higher than this differential. And so they're willing just to dump it at a loss, now trading at negative 18 cents. This is just absolutely unbelievable. You can see here, front oil trading at 18 cents. Now, a very interesting thing happened. I just saw this article this morning, and I'll link to this, that the oil ETF, USO, which is the main one that's traded in the US, and the one that a lot of you have asked me about, as of last week, this ETF owned 25% of the outstanding volume of these May crude oil contracts. And this is the way this ETF works. I'll link to the video where I talk about it a little bit more. But what it basically does is it buys the front months in crude oil. And then right before they expire, it rolls out to a further month. So what's the problem with owning USO? I go into this in more depth in my other video, which I'll link to. But the basic problem is USO is probably now having to dump their May 2020 futures, and this may be contributing to the massiveness of the sell-off. But what they're doing then is buying the June futures. And after 30 days, they're going to need to roll into the July futures. But what happens if oil, the front month, or the cash or spot price is still trading at zero or negative? Well, you basically have a situation where you're buying crude oil at $21, $22 a barrel and then selling it for zero. This is what makes USO and some of these other ETFs so dangerous. They stay in the front month, and you can see basically crude oil is in contango. So if here's the price of crude, here's the timed expiration. You have all these different contracts right here. And the price is, I can't even draw it, it's so steep because we're basically at, well, I probably should have made this negative, but let's just say the front is at 0. The next month out right here is at 21. And so what you have is what's called a negative carry or a negative roll down yield. They're different terminologies that are used. But if you buy USO at these prices, we can see where, let's check out where USO is trading right now. Finance USO. If you buy it, basically you are going to get eaten alive by this contango. You can see USO is down 9-10% on the day. And this is something I was warning you guys about. But if you continue, if you think you're going to buy oil on a dip here and that this is a really good deal, know that this thing can go down very rapidly. USO, I don't believe, can go negative, but it can certainly go to 0 or very close to 0. And this is simply because of this negative roll yield. USO right now, you can see that the volume, most of the futures volume is in June 2020. There's very little volume, just 140,000 contracts left in the front month. This is really just people who deal in physical oil who are dealing with this. And so as we speak, I would imagine that USO is rolling into June or has already done it, though I would guess they're probably still doing it, which is why there's this sort of panic here. And so what will happen, they'll be buying at 21 or 22, and when it comes time to roll out, this could be, these June contracts could be $5 per barrel or $0 per barrel or negative $1.57 per barrel or negative $2 per barrel. So there's huge potential here for USO to go down. It's a very, very dangerous ETF. I've talked about these leverage ETFs, oil ETFs, very nasty financial instruments. So don't try to buy oil on a dip, especially knowing that it can now go negative. Now, my favorite oil stock is, well, before I do that, let me just mention crude oil can go negative, but further out the curve, as we saw, it is trading at $20, $30, $35 per barrel. And that's why the oil stocks are not down more than they are now. If we saw long-dated crude start to fall, so maybe crude a year out, as we talked about, the May 2021, if this one started to fall off a cliff, you can see today it's just down 3 cents. It really, up to December 20th, everything's negative. You can see that even some of the crude oils for delivery in January, February, March of next year are flat or slightly positive. But these oil majors, which I don't happen to like, I don't own any of these. I don't really like the way they're run. I don't really like crude oil. But these are priced off the long-dated crude, and that's why they're not down more. Because basically the value of Exxon is the discounted future stream of cash flows, and that cash flows will largely be determined by the price of oil. But so these, if you believe oil will go up eventually, these might be okay holds. But USO is definitely not the way to do it. Crude oil is not the crude oil futures is not the way to do it. You can see we're now trading at negative $3.70. So what's my favorite oil stock if I had to pick one? I would say TPL. This is a land trust that's part of the land that used to be owned by Texas Pacific Railroad, which filed for bankruptcy. The land was put in a trust, and then they discovered there was oil underground. So if you want to buy oil in the ground, or in more precise terms, the royalty stream from people selling, other people, basically the oil majors pay TPL to pump the oil. They get a percentage of the revenues. They get a revenue share or a royalty on the oil pumped, and they don't have to share in any of the capital expenditures, which is really nice. So this is a nice way to play sort of oil in the ground. But it only makes sense if you think oil is going to be sharply higher over the coming years. Now, I understand why people are drawn to crude oil and drawn to physical assets, especially in a time of uncertainty in a bear market when stocks are very volatile. People are looking for solidity or some sort of foundation to stand on. But I would encourage people not to look in the commodity sector. the commodity sector has not been a good long-term hold. And part of the reason is just the negative carry that you can often get. Now crude oil trading at negative $5 per barrel. But also most commodities are mean reverting. So if prices go way up, you get the producers producing a lot more of the commodity, and that drives the prices back down. Now there's one exception to that, really two exceptions, silver and gold. But silver is not quite as scarce or as rare, or it does not have as high of a stock to flow ratio as gold does. So gold, if you're looking for physical commodities, sort of physical stability, gold is a very good store of value. Right now, it's very difficult to get your hands on physical gold, but you can. There are ETFs that track this, which I don't like quite as much. GLD. I think really the only way to hold gold, you don't want to hold it with some other custodian where it's in a vault somewhere and you just have a piece of paper, a gold IOU. So if you can get your hands on gold coins or gold bars, I think these do very well over the coming decade. Now the other place that's sort of an inflation hedge, a store of value, would be land. But you have to, land, real estate, housing, you have to be very careful. So I often joke that you don't want to buy land in the desert that's not scarce. So there's a lot of land in the middle of the U.S., especially in Nevada, very empty land. You can see that here is a ranch. They call it a ranch. It's really just a 41-acre parcel. And believe it or not, you can buy this 41 acres for $100, and you can have this land. Now there's probably some easement problems. It almost certainly doesn't have any water, etc. So if you want a store of value that's not gold, you don't want common real estate that doesn't have anything special, but instead you want scarce real estate. So I'll use an extreme example, which is very expensive, too expensive for most people, but California oceanfront real estate, very scarce. They're not making any more of it. This functions as a good store of value when the U.S. dollar is being printed to excess, when fiat currencies are being devalued. And so gold, real estate, these are places to hide, as well as Bitcoin, which may be a little surprising to you if you haven't heard me talk about Bitcoin in my other videos. I'll link to that below as well. Bitcoin is even more scarce than gold or California real estate. You can't hold it in your hand, but it has many very interesting properties, which I'll talk about in that video that I linked to. Now, if you're interested in any of this and you enjoy my teaching style, I'd encourage you to check out my online courses, especially Learn to Trade Futures Like a Pro. If you jump in and start trading futures without knowing what you're doing, especially because of the leverage, you can really, really get hurt. So I would encourage you, you don't have to take my course, but if you are going to trade futures or options or anything like this, make sure you know what you're doing before you actually do it, or you'll end up paying tuition one way or another. And the tuition when you lose money trading futures is usually much higher. But here's a course, and if you join Trader University Premium, you get access to all my courses, all 13 courses, which include Learn to Trade Stocks Like a Pro, Swing Trading with Options, Bear Market Trading Strategies is a great one for this environment. Lots of trading strategies that work in a bear market. If you're interested in Bitcoin and crypto, you can follow along with my actual trading account and see inside when I'm buying Bitcoin, for example, as well as all these other courses, financial statement analysis, Learn to Trade Futures Like a Pro. And if you're interested in real estate investing made easy as well as a course on covered calls. So if this is something that interests you and you enjoy my teaching style and you've got some downtime now and you want to use it productively for self-education, you can just click the link in the description notes below. It'll take you to this page and you can click on any of these courses and you'll see the curriculum, the list of lectures. And if you're interested, you can scroll down here, click Get It Now, which will take you to this checkout page. And because we're in a recession now, I want to give you a better price. So normally access to all 13 courses for 30 days, the tuition is just $125. You can watch all the courses, cancel at any time, and there are no long-term contracts or anything like that. But I want to give you a coupon code today, YT, as in YouTube, 99. If you click Update, that will take you to, that'll take the price down from $125 to just $99 for 30 days access. You can watch all the courses, take notes, cancel before it renews, and you won't be charged again. Again, no long-term contracts. And if something's missing from the list of courses or lectures that you'd like to see taught, you can just send me an email or contact me using the contact form as a subscriber, and I'll make a course or a lecture about whatever you're interested in, if it has to do with the stock market or options or futures or crypto or anything like that. And then I'll post the course for everyone to be able to use. Hope you found this video helpful. Be sure to hit that subscribe and like button if you haven't done so already. And let me know your questions and comments in the comment section below. Hope you're all staying well. Before we go, let's just take one final look at the price of crude. Negative $9. Absolutely unbelievable. So for those of you living and trading during these times, these are definitely historic times. I've never seen anything like this. So make sure you stay careful out there. Hope you're all staying healthy and sane, and I'll see you in the next video.